So what's going on here, Mark? Is this insider trading at the highest levels here?
Well, no, and that's the scary part. This is just how it works. It's completely legal.
And it happens every day on Wall Street.
But we're here to help the folks watching realize that they can do this as well.
And it's pretty simple, actually. Just don't expect anyone on TV to tell you about it.
Right now, here in New York City, in the heart of the financial district, Wall Street's biggest institutions, JP Morgan, Goldman Sachs, Bank of America, are quietly pulling billions out of the market's most popular stocks and moving their money into a completely different list of potential winners. Today, two investing legends are teaming up for the first time in 8 years to prove that what you hear from the talking heads on TV is often the exact opposite of what Wall Street is doing with its own money. And if you're just listening to the smart money, you end up trapped in all the wrong stocks. Instead, you should just follow the inside money, which is far easier than anyone realizes. Today, we're going to show you a simple way to see where the smart money is positioning itself over the next 12 months before those moves make headlines, and give you the name and ticker of one standout buy recommendation 100% free, as well as the ticker of one popular stock our experts urge you to sell immediately. Hello, my name is Tom Mustin, formerly of CBS and ABC News, and our guests? They're celebrities in the financial markets, often stopped here on the streets of Lower Manhattan by fans and followers of their work. In the next few minutes, they'll share what you almost never hear about on mainstream financial TV, even though they've appeared on CNBC and Fox hundreds of times. In fact, they privately funded today's broadcast, so nothing is edited, softened, or filtered through a network agenda. As you'll soon see, Wall Street and the financial media have a long-standing agreement that nearly guarantees you'll never know what's really happening in today's capital markets. And while you hear about the same mega cap stocks every day, we're talking about Google, Tesla, Nvidia, the biggest gains are often happening somewhere else entirely, in companies you never hear about. For example, do you own any of these stocks? Look closely. Have you ever seen these tickers discussed anywhere in the financial media that you can remember? These are some of the best companies to own in the past 5 years. They're not penny stocks, and many are billion-dollar businesses, but I'd bet you'd never heard of most of them. In fact, I'd wager that during the entire time these stocks were climbing, doubling, tripling, going up 10x, 20x, even 90x, you didn't see a single segment about them on CNBC. Not one analyst recommendation on Fox Business. Not one hot stock pick article in the Wall Street Journal. Why is that? Well, today, you'll hear the shocking reason and have the choice to walk away with a similar list of stocks, all poised for huge gains. Over the past 3 months alone, the types of companies we'll highlight today have returned gains of 101%, 136%, 271%, and even 342%. They don't belong to a single asset class, nor are they the result of some breakthrough technology. Yet, investment banks, hedge funds, and institutions, what pros call the smart money, have been piling into these tickers over the past few months. To explain everything, let's welcome 50-year Wall Street veteran Marc Chaikin and market expert and former CNBC star John Dr. J. Najarian.
Tom, thank you for helping us get this message out. The timing couldn't be more critical.
I agree, Mark. Thank you, Tom. I know we're all used to prime time, but we can't share this story on any of the major networks. So I'm glad we can basically broadcast our own show today. And trust me, even just 10 minutes with this guy, Marc Chaikin, can change your financial life and your money. I know from personal experience during one of our CNBC appearances together back in 2012 that Mark saved me from a trade that would have blown me up in less than 24 hours later.
Was that Priceline, John?
That's right. That was one of my favorite positions at the time. But Mark didn't just talk me out of the trade. He convinced me to go the other way. Instead of crippling losses, I went on to make a 733% gain. So I'll never forget it. Now, whenever Mark says something, I listen. And when he told me the story he'll share today, I promised to call in every favor I could to help get the word out.
Now, John, I really appreciate that.
And that's a big statement coming from Dr. J himself. This is the man who spent 16 years as a mainstay on CNBC, probably longer than any other analyst in history. Now, John, you did segments with hundreds of experts, and your trading experience has helped you deliver monster winners for your followers, like 446% on vaccine maker Moderna, 1,448% on AI darling Broadcom, and 1,580% on retailer Macy's. But you aren't the only one from CNBC who holds Marc in the highest of regards. Your mutual pal, Jim Cramer, has also crossed paths with Marc, and he said he's learned never to bet against Marc Chaikin.
Well, Tom, that's very flattering, and I've been doing this a very long time, and I'm grateful to have worked alongside the likes of Steve Cohen, Paul Tudor Jones, and George Soros. But what we're revealing today is much bigger than any one trade or stock. It's about how you can know which stocks are most likely to plummet and which are most likely to soar using the same approach I used on Priceline back then. So look, I know a lot of folks feel like they've missed the AI boom or got in too late to capture the biggest gains. But what we're sharing today is something you simply cannot skip because it ensures you'll never miss those sorts of trends again. Not only that, but it protects you from their inevitable reversal.
Now, that's a bold claim, Marc, but you've made plenty of bold market calls during 5 decades as a financial analyst. You predicted the COVID-19 crash, the bull market that followed, the 2022 bear market, and the red-hot bull market ever since.
Well, I have, and I believe 2026 is also going to surprise most investors. That's because we're approaching what I'm calling a slipping point. And I believe the moves investors make starting right now could determine if their portfolio essentially slips and falls on its head in 2026 or if it soars to new heights, despite today's historic volatility.
So, Marc, tell us what you mean by a slipping point.
Well, what I mean is that countless investors will wake up one day sitting on heavy losses, only to realize the real gains were being made somewhere else entirely. They'll feel like the rug was yanked out from underneath them, and John and I are here today to make sure that that doesn't happen to you.
Listen, Tom, I spent years on CNBC, and I saw how the game is played firsthand. The old adage, if it bleeds, it leads, isn't just true, it's their entire business model. I'm sure you experienced the same thing at CBS. Producers were always booking hedge fund managers or high net worth individuals on the daily segments. And if they had outlandish predictions, even better. But here's what never sat right with me. These predictions were rarely tracked over time. You could be dead wrong for years and cost viewers a fortune and still come back the next week with a new prediction. In fact, a lot of these people were often saying one thing on air and doing something very, very different with their own money or their firm's money.
So, John, are you saying there's a special relationship between Wall Street and the financial media?
Of course. While billionaires on TV tell you to be scared, they're often quietly buying. These are the people called the smart money on Wall Street.
Do you have any examples for us?
Well, dozens. I have dozens of examples. Just last year, the billionaire founder of Bridgewater Associates, Ray Dalio, whose 50-acre Greenwich estate has nearly a mile-long island sound frontage, put out all sorts of warnings. In June, Dalio told Inc. magazine that an economic death spiral for America was at imminent risk. He didn't say recession or downturn. He said a death spiral.
And John, that sounds pretty scary, but isn't he entitled to his professional opinion?
Absolutely. But if you truly believed America was about to have an economic death spiral, would you be buying stocks? Of course not.
Right.
But Dalio, he was loading up. At the very same quarter, his hedge fund started loading up on tech firms like NVIDIA, Microsoft, Google's parent Alphabet.
Now, remember, Tom, that was right after the big sell-off that we saw from the tariff announcements.
Wait, so while regular investors may have been panic selling their blue chip stocks because of tariffs, the smart money folks like Dalio were on the other side of those trades?
That's right.
And how do you find buying patterns like this, Marc?
Well, I can see this clear as day because I have something that most people don't have. For the past 40 years, I've spent a fortune fine-tuning an indicator that tracks this exact same thing. It shows me how the smart money is moving throughout the market, which stocks they're buying and selling, and at what pace.
Mark is being modest here, Tom. The proprietary indicator he's talking about is called the Chaikin money flow. It is one of the most widely used tools on Wall Street and in every Bloomberg and Reuters terminal, and used by hedge funds, banks, brokerages around the world. It's just one of his many contributions to the financial world. You've heard of Bollinger Bands before the technical trading tool?
Yeah, sure.
Well, investing legend John Bollinger himself thanked Mark personally in the introduction to his seminal technical analysis book. Still, when it comes to the trading world, tracking the smart money is Mark's crowning achievement.
Well, thank you very much, John. But actually, you and your brother Pete literally wrote the book on smart money. I mean, you're a renowned expert on the topic, which is why I wanted you here today.
Again, I'm glad to be here. And keep watching, because Pete is going to pop in later with a big announcement. Look, what we're about to show you won't make Wall Street happy. Mark's indicators let you see exactly where their money is going, and they're not going to win us any new friends.
So, Mark, is your smart money indicator how you knew folks like Dalio were buying as he was warning of an imminent financial apocalypse?
Exactly, Tom. While the world was panicking, Dalio and other smart money folks were buying shares of some of the biggest future winners at massive discounts. Now, here, I can actually show you. When you look inside my system, a Chaikin money flow line appears underneath every stock chart. It looks like this.
So tell us what the mountain-like shapes there represent.
It's really simple. When the, let's use your word, mountains, are green, that's smart money pressure building up in the stock. The red mountains are just the opposite. Smart money dumping the stock.
That feels really straightforward.
Very much so, Tom. My tools are designed for average people. My wife Sandy uses them, my neighbors, my friends, my sons, as do people inside many of the most powerful hedge funds and banks in the world. And if you pull up the stocks that Dalio bought in the second quarter of 2025, you'll see that the smart money has been piling into them since about April, including NVIDIA. It's up as much as 85% since May 1, and Microsoft, which rose as much as 27%. Same with Alphabet, which rose as much as 104%. So if you're interested, you can see all the research behind these figures on our disclosures and disclaimers page, linked at the bottom of your screen.
Dalio did it again just months later, warning that we were approaching that very, very dark time, and then proceeded to buy shares of Robinhood Markets, Applied Materials, and Lam Research.
And I'm guessing, Mark, that the money flow picked up on that as well.
That's right, and you can see the smart money piling into these stocks just before the big run-up, sending Robinhood up as much as 65% in just 3 months. Lam Research up as much as 129%, and Applied Materials up 67%.
But John, what do Dalio and the smart money know that the average person doesn't?
Well, think about it this way. Institutional investors have entire research departments and teams of analysts devoted to the big names. The likelihood that they know more about a company than the average investor, it's pretty damn high.
But the beauty of my indicator is that it doesn't matter what the smart money knows, Tom. You can track their activity every day and get positioned right alongside them before the big run-up.
I like to think of it as having tomorrow's newspaper today.
And I'm guessing that Dalio is not the only one guilty of saying one thing and doing another with his money, right?
Not at all, Tom. Michael Burry, who famously predicted the housing crisis back in 2008, has been all over the news lately. In December of 2025, Burry warned of a number of bad years for U.S. stocks.
And John, we can actually pull up that quote. He said, quote, "I think when the market goes down, it's not like in 2000 where there was this other bunch of stocks that were being ignored. Now I think the whole thing is just going to come down."
Right. But what wasn't widely reported is that a month before, Burry was loading up on shares of Pfizer, Halliburton, Molina Healthcare, and Lululemon Athletica. Now, these stocks aren't concentrated in one sector, so he's not making a bet on a certain trend. If the whole thing is going to come down, why would you buy a drug company, an oil service company, and a company that makes exercise clothes?
David Einhorn of Greenlight Capital is another good one. In May of last year, he warned that the U.S. should be prepared for a punch in the face if a trade war with China comes. But then, almost comically, was buying shares of Victoria's Secret, a company with significant supply chain exposure to China, in his own accounts.
Now, that stock is up 214% over the past 6 months, Tom.
Wow, that's impressive.
This isn't some new thing. It's been happening for years. You might remember that the billionaire hedge fund manager Bill Ackman made a headline at the start of the COVID-19 lockdown with an emotional "hell is coming" warning on CNBC. Remember that moment? Well, people were terrified. And then here comes Ackman, breathless, voice shaking, warning that hell is coming. It was one of the most emotional, frightening moments in financial media history. However, Ackman had already positioned his fund, Pershing Square Capital Management, to profit from the crisis. He bought credit default swaps, and days earlier, within just days of that March 18th CNBC appearance, Ackman sold his hedges, pocketed approximately $2.6 billion in profits, and used those proceeds to buy more stocks.
Now, Mark, you're also credited for speaking out during the 2020 crash, but your approach was very different, wasn't it?
Completely different, Tom. Using my system, which I based on Chaikin money flow, I could clearly see which stocks money was flowing into and out of. And on March 1st of 2020, I publicly announced, plan for the worst. But here's the key difference. I wasn't positioned to profit from scaring people. I was warning my followers to protect themselves because that was what the data was showing.
And that was a bold call considering we had already seen a big one-day drop in late February.
Sure, but people thought the worst was over. There were warning signs piling up in my system, and we knew it would get even worse.
And it clearly did.
Yeah, that's right, Tom. The market continued to crash another 23%. Now, that's a whole bear market in itself.
Sure.
But here's the most interesting part. In my experience, having traded through 9 bear markets over the course of my career, most true bear markets last anywhere from 9 to 24 months, and they're brutal. But when I looked at my system a few weeks later, I saw the smart money was already quietly buying again. So I issued a new alert to my followers. I said, be prepared for violent bear market rallies. Now, I wasn't scaring people on TV while secretly positioning myself to profit. I was simply following the data to the logical conclusion.
And Mark, what happened next?
Well, my system showed us exactly where the smart money was buying. It flashed bullish on electric vehicle maker NIO, up 884% in about 8 months. Biotech firm Novavax up 335% in 2 months, and Fulgent Genetics up 799% in around 9 months.
You can see the difference, right? Mark called both the crash and the rally and told people about what was about to happen. He wasn't saying one thing and doing another.
Now, look, I'm not trying to make myself out to be a hero. I'm just trying to show you that you don't have to guess what billionaires are thinking. You don't have to try to read between the lines of their TV appearance. You just have to watch what they're actually doing with their money. And that's the whole reason I created the Chaikin Money Flow Indicator. Now, do you think Wall Street would still be using it 40 years later if it didn't work that well?
Well, considering the seesaw of financial headlines we've been living through and countless other worries, I wonder why I haven't heard about this indicator, or most folks haven't. When Mark, you've used it to help steer your followers in the right direction again and again.
Wall Street and the media thrive on the same thing, attention. Financial news shops have to create 12 hours of content every day, and that isn't easy. It's a terrible shame, because most of the people think they're actually doing the right thing, keeping up with the news, but they're usually just chasing yesterday's headlines. Meanwhile, the biggest and fastest gains are happening somewhere else entirely.
So what do you guys mean by yesterday's headlines? Because from everything I see, there's only one story on Wall Street: AI.
Well, you're right. The AI boom is everywhere. Companies are laying off workers at the fastest pace since 2008. Yet the stock market keeps climbing on the backs of a few AI giants.
But if you've watched these dominant AI companies continue to push your portfolio to new highs, you at least need to understand the risks. Did you know that over 40 cents of every dollar in an S&P 500 index fund is tied to just 10 companies, and 8 of those 10 are technology firms directly linked to the AI boom. That means if AI stumbles even a little, millions of investors could see their retirement savings hit hard, even investors who have followed the advice to put their money in safe, diversified index funds. Because if the biggest 10 companies in the index were to suffer a fall, even if the other 490 stocks in that market were fine, it'd be 2008 all over again in a matter of days.
So are you warning about a coming crash in the AI bull market?
We're not predicting a crash per se, Tom, no. But what I'm seeing with the Chaikin money flow right now, today, is significant enough and far-reaching enough that I immediately called John. You see, the point is, it's never been more important to make sure you're holding the right stocks. And that doesn't just mean buying winners. You also need to avoid the ticking time bombs that could wipe you out at any moment. I often say it's the stocks you don't own that matter most. Since John analyzes and trades the market differently than I do, I wanted him to confirm what I was seeing. He has one of the most successful patented trading systems in the world, a system so effective that he and his brother Pete partnered with General Atlantic and then sold their firm to E-Trade for $750 million a few years later.
So can you show us what you're seeing in Chaikin money flow right now then?
Sure, Tom. Nothing illustrates the story we want to tell quite as well as a stock called Ciena. Now, have you heard of them?
I can't say that I have.
I doubt many have. It's a high-speed connectivity company based out of Maryland. But its stock is one of the top performers over the past 6 months, up as much as 187%. And if you were to dig a little, you could see exactly who owns this stock using public filings. JP Morgan owns 6.4 million shares as of September. Vanguard owns 15 million shares. And BNP Paribas, the largest bank in France, owns 2.5 million shares. Wow. They were all in before that big pop. And if you were to cast a net a little wider, you would see that the number of hedge funds holding this stock jumped by almost 20% right before the last quarter of the year.
So let me get this straight. Right before we saw that huge run-up in the stock, hedge funds all of a sudden started buying up shares of a seemingly unknown company that has essentially gone nowhere for the past 5 years?
Exactly right. But here's what's most interesting. If you were to search the Wall Street Journal database for articles about Ciena in 2025, there were just 3 for the whole year. One about their longtime CFO leaving in April, one about the new CFO in June, and another that month about Ciena beating earnings.
So, John, arguably the largest financial news source in America was hardly covering a company that hedge funds were piling into, and that didn't trigger any editorial interest?
Barely. I mean, they spent twice as much time and ink covering Ciena's CFO changing. And then, after writing one article about the earnings beat, not a mention for the next 7 months as shares just ripped higher.
So how would a normal person even think to look for a stock like that? I mean, Mark, how does a name like Ciena end up on your radar?
Well, Tom, that's actually the point. The places where money is being made today are not where everyone is looking. Folks are distracted. They're still pouring their hard-earned money into the same stocks that they've been hearing about on the news for years.
Either that or their accounts are actually set to automatically purchase more and more index funds, essentially continuing to accumulate larger and larger positions in the biggest companies in the world, the NVIDIAs, the Microsofts. Meanwhile, Wall Street is moving on to an entirely new set of winners.
Well, Tower Semiconductor is another great example of that, Tom.
I've heard of Taiwan Semiconductor, but not Tower.
Right, Tom. This time, no hits on the Wall Street Journal. The stock page says no significant news for TSEM in the past 2 years, and yet it's one of the top performing stocks of the past 6 months, up as high as 171%. Now, who owns it? The usual suspects, Vanguard, BlackRock, and Steve Cohen's hedge fund Point72 Asset Management. And the number of hedge funds who had this stock as one of their top 10 holdings, meaning one of the stocks they own the most shares of, doubled right before you see that stock spike at the end of the year.
Wow. So these hedge funds aren't just adding a few shares to their portfolios. They're making seemingly little-known companies one of their biggest holdings right before a huge run-up.
It happens all the time.
So what's going on here, Mark? Is this insider trading at the highest levels here?
No, and that's the scary part. This is just how it works. It's completely legal.
And it happens every day on Wall Street.
But we're here to help the folks watching realize that they can do this as well.
And it's pretty simple, actually. Just don't expect anyone on TV to tell you about it.
Everything these firms are doing is totally above board as far as I know. It's all public information, but this type of activity isn't making the news because, frankly, it's not news. I could go through a dozen more examples like this, and as John said, it happens all the time. And I know this because this is exactly what the Chaikin money flow is set up to track. All I'm trying to highlight is that most people are not even looking in the right places right now.
I agree, but it's not their fault. You can't find something if you don't know what you're looking for. But that's where Mark and I can help you.
And this is what the Chaikin money flow can do for you.
Well, not only that, my tools can show you how to position yourself so you're ahead of it, Tom. So let me ask you this. If you knew that New York Mets owner Steve Cohen's hedge fund, or any multi-million or multi-billion-dollar hedge fund here in New York City, was interested in a stock, would you buy it first?
Absolutely.
Of course you would, because nothing can make you wealthier than buying stocks when they're sitting in front of a freight train of institutional money. Now, consider this. In April of 2025, Howard Marks, the billionaire co-founder of Oak Tree Capital Management, wrote a memo about the potentially dire economic consequences of tariff policies. He outlined multiple consequences, including retaliation by other countries, price increases, rising inflation, recession, lost jobs, and supply shortages. But just a month earlier, what was he doing? He was buying shares of the Chinese company Baidu and loading up on shares of Barrick Mining. Baidu is up 75% in the past 6 months, and Barrick is up 138%. If we look at Barrick, you can see Marks was ahead of the curve buying in April. The smart money started piling into the stock around the end of May and really ramped up in June and July. It's an entire Green Mountain range of money flow.
Remember, this shows you that institutional investors, like hedge funds, mutual funds, and just very large speculators, are buying into this company. Money flow is like that jumping puddle in Jurassic Park. You don't see the T-Rex yet, but the ripples tell you it's coming.
Right.
John and I have each built $100 million businesses around tracking and trading with the smart money. It's been the focus of our entire professional lives. And if you were to look at my system right now, you could pull up 20 plus examples of smart money stocks in seconds that would have all made you money over the past 6 months, like Anglo Gold Ashanti up as much as 101%, or Warrior Met Coal up as high as 97%, and the big one, Micron Technology, up as high as 191%.
And it's incredible to see those types of gains in just a few months. But Mark, how did you figure this all out?
Well, it's been the journey of a lifetime for me. I got one of my first jobs on Wall Street after answering a classified ad for a financial firm in Manhattan. But to get hired, I first had to take a psychological test. So they handed me 2 identical pages from a New York City phone book and told me to find the single character that was different. I spotted it in about 4 seconds, a little bit spooky. They looked at me and said, "You passed with flying colors, Mark, but would you mind taking another hour of testing? We've never seen anyone do that before." Now, it's that ability to see patterns and numbers instantly that carried me into technical analysis. I can look at raw data, stock prices, and the relationships in the market and see patterns form in my head. Now, I'm not a polymath or a Rain Man type, but I can see patterns that other people miss. And that's what allowed me to build my system. I spent most of the 70s perfecting it. It was an instant success when I released my indicator into the public domain. Traders like John embraced it as a tool to see which stocks were lying in front of a potential freight train of money. Today, my system has become so sophisticated, it can show you what the smart money is doing across over 5,000 stocks every day.
Would it have worked with the 2 stocks we were just talking about earlier, Ciena and Tower Semiconductor?
Absolutely. You'll see here that Chaikin money flow flipped from red to green in late July as smart money poured into Siena and pushed the share price higher for the next 6 months.
The spike is almost instantaneous when you put these two data points side by side. Money flow builds. Up goes the stock.
And it's the same with Tower Semiconductor, Tom. We see the flip in late August as Wall Street started buying almost immediately. The share price starts its run.
Incredible, Mark. So your system picks up on the smart money flowing into the stock just before the massive rally kicks off. But I suppose my real question is, how does Chaikin money flow actually work? In other words, how do you know this, and what's the data behind it?
Well, that's a really good question, Tom. And the short answer is, why don't I just show you what it takes to find the money flow for over 5,000 stocks in real time? It's a formula that looks like this, and this is what's at the heart of everything.
And your system is called the power gauge, correct?
Exactly. It's used by around 100,000 people, and it's the platform where all of my tools and data live. I have an entire team dedicated to the power gauge, and over the years we've continued to refine our tools, including adding special signals designed to help us spot when the smart money is piling into more than 5,000 stocks and about 1,000 ETFs. At any given time, my system will rate a stock bullish, neutral, or bearish. So again, if we look at Siena, my system would have issued a bullish rating right here, helping you capture as much as 172% gain. And for Tower, the system issued its bullish rating even slightly ahead of the smart money, here, for the chance to see gains as high as 221%.
That is amazing. So not only does your system track money flow, but it also analyzes whether to be bullish or bearish on any stock.
That's exactly right. Informed directly by what the smart money folks are doing, thanks to Chaikin money flow.
Okay, so in that case, let me ask you a question, Mark. What stocks are your system bullish on right now?
One stock that I've been looking a lot at lately is Western Digital. It's on a tear. Can we pull that one up, Mark?
Sure. Just as I suspected, smart money started flowing into Western Digital in late June and continued steadily for months. Now that stock bounced 220% in just the past 6 months alone. Money flow builds, up goes the stock. It nearly doubled as the more popular stock, Nvidia, went nowhere.
And you won't be surprised by who owns the most shares. Of course, Morgan Stanley has 8.4 million shares. Bank of America has 22 million shares. And JP Morgan, 24 million shares.
And over half of the funds holding shares of Western Digital increased their shares over this time period, not to mention a 66% jump in the number of funds listing this stock as a top 10 holding.
Okay, but let me ask you a question here, Mark, because something really sticks out, kind of like a sore thumb. How do you explain the red blip right there while the stock continues to rise?
Great question, Tom. And you're always going to have some natural swings in money flow. But what I look for is pressure. My team and I use a term called money flow persistency to describe this. That means we look to see where there's been at least 3 months of institutional buying or selling pressure behind a stock, because that's usually where you can see the biggest price movement, up or down.
Can we put that to the test?
Oh, by all means, John.
Okay.
Okay, so what about one of people's favorite stocks lately, Palantir Technologies?
Okay, this is perfect. See how the money flow looks like red and green mountains for most of the past 5 years, Tom? Mm-hmm. That's institutional money wavering on the stock. Now, sure, it might have had some good runs, but you can see clear as day that when the green money flow mountain really flips to green and stays there, a tremendous amount of pressure starts to build behind the stock and the share price explodes. The stock flipped to bullish on my system on June 21st of 2024, and Palantir is up as much as 642% since then in just 18 months.
Wow, and Mark, you're going to give everyone watching your favorite smart money stock today, right? And I'm guessing that it has a strong money flow persistency.
It sure does, Tom.
Well, I bet you'd see the same thing if you looked at Robinhood, for instance, right?
John, you absolutely would. In fact, I first told my followers to buy Robinhood on November 21st of 2024 because of positive money flow persistency. You never really saw that persistency until the stretch between August of 2024 and November of 2024. So a healthy 4-month stretch. But if you had bought on November 21st of 2024 and held until today, you'd be up as much as 300%. It would have been a fantastic entry point.
Well, now Pete and I, my brother, are known, even well known, for our work on unusual option activity. But what people who haven't done our trading courses do not know is that money flow is one of the secrets to how we filter through options activity to find the best opportunities. And it shouldn't be hard to understand why after Marc just showed us what he showed us. Because if you just think about it, even if you never watched CNBC or picked up a single issue of the Wall Street Journal over the past years, if you looked at the Chaikin money flow, it could have gotten you into not one, but two of the best stocks in the past few years, Robinhood and Palantir. And you made 4 times your money or more 2 different times.
And Tom, the best part is that when you filter for companies where the smart money has been persistently buying for the past 3 months, you'll often find tickers you've never heard of lately.
Can you show us what that looks like, Marc?
Sure. Let's pull up a screen of all the companies that have experienced persistent money flow over the past 3 months. Now, you'll see some names you recognize like General Motors and Google, actually Alphabet, and others probably don't, like Hycroft Mining, Relmada, and Taylor Devices. And just look at how they performed as the smart money moves in.
Well, so in other words, every single one of those is up over the past 3 months.
Yes, but context is key here. That's over a 3-month period where the S&P is up less than half of 1%. But look how much better you could have done by focusing on the Chaikin money flow. In most cases, you would have made 40%, 50%, 60%, even 100% or more by following the smart money.
And I'm not trying to be reductive here, Marc, but it all seems so easy when you look at the market this way.
Now, Tom, no system is perfect. You should always do your due diligence before you invest, but it's far more simple when you can look at it with this filter. It takes all of the emotions out of it.
And John, you said this is something that's a big part of your approach as well.
Absolutely, Tom. And not just for me. This is one of the most important tools every professional money manager's toolkit should have.
So you mentioned that you and your brother Pete are best known for unusual option activity. For folks here at home, tell us exactly what you mean by that.
Well, in simple terms, we look at option contracts where volume suddenly spikes. Out of dozens of contracts on a stock, one lights up. Like a zebra separated from the herd. It sticks out immediately.
And you don't always know why, though.
No, exactly. We may not know the thesis, but we don't need to. A bet that big usually means somebody with deep pockets or deep knowledge is involved. And it's the same idea behind Marc Chaikin's money flow. We follow what the smart money is actually doing.
And I just want to remind you folks at home that our experts will soon reveal the #1 smart money stock to buy today and the #1 dumb money stock to avoid at all costs.
It's a company that's disrupting one of the most important industries in the market right now. It's growing fast and it's rewarding investors. But before I give you the name, I need you to understand something. This isn't about guessing what happens next. It's about seeing what Wall Street sees. And the truth is, once you start investing this way, you stop feeling anxious, you stop dreading checking your brokerage account. And if you're someone who hates logging in, someone who checks their 401k and instantly feels stress, I mean it, the power gauge could change that for you. Over time, it gives you clarity, control, and confidence.
And that's certainly what your followers say, Marc. For example, Dawson D. wrote to tell you, in just over a year, I increased the value of my portfolio by almost 70%, thanks mostly to the power gauge. And Greg H. sent the following email. The power gauge helped me gain back about 50,000 of losses. I use it daily. It was well worth it, and I've made money.
Now, Tom, this chapter of my life, putting these tools in the hands of everyday people, has been the most rewarding work I've ever done. And I don't want anyone watching right now to miss what could be a huge year because of media noise, misinformation, or fear. So I've done the heavy lifting for 2026.
So what exactly do you mean by that, Marc?
Well, I've used the power gauge to create a list of the best smart money stocks you should buy today which could all potentially double in value or more very quickly. It's called the Chaikin 2026 Buy List. These are absolutely the best opportunities that my system is flagging today. We'll add and trim this list as opportunities arise, but there's only one place to get this list, my world-renowned research service called Power Gauge Report.
Well, after everything we've seen, I think it's clear that investment success is all about what's coming next, and that you won't figure that out reading headlines or watching the news. And that's exactly what the Power Gauge is designed to help you do. For example, the Power Gauge flashed bullish on NVIDIA in early 2023 before AI was making headlines. Novavax in late 2019 before the first COVID-19 lockdowns. GameStop in 2020 before retail investors pushed it sky high. And Riot Platforms before Bitcoin crossed $60,000. And for more than a decade, the Power Gauge has helped Marc find the market's biggest opportunities year after year in bear markets and bull markets across every sector, industry, and little-known corner of U.S. stocks.
And we're proud of that, Tom, but never satisfied. We keep refining the system, improving the indicators, and building new tools because I don't want folks watching to fall victim to a major slipping point in 2026. I don't want you to suddenly realize that the smart money has quietly exited the stocks in your portfolio and are instead making money in an entirely different group of stocks. That's why today I'm opening the doors and giving you a chance to try Power Gauge Report at a huge discount with a full 30-day money-back guarantee. And I truly believe that once you start using it, you'll never want to buy another stock without checking it first.
In fact, that's exactly what reader Charles P. told us. He said, I successfully managed my retirement account with this. I've tried many programs over the years and have literally spent thousands of dollars. None have been as easy to use or reliably accurate. In today's market, this information is a necessity. I would not invest without it. Now, with feedback like that, you can see why institutional investors have paid Marc's firm up to $5,000 each month to access his software. And consider, if you wanted to access ideas Marc developed through a Bloomberg terminal, you'd pay $24,000 a year for the privilege. But today, Marc is offering a 100% risk-free trial to everything he detailed here. In addition to Marc's top smart money stocks to buy, you also get an entire model portfolio of his highest conviction Power Gauge investment recommendations right now. There are typically around 10 recommendations in the model portfolio at any given time.
That's correct, and we purposely keep this trim. We don't want dozens and dozens of recommendations. In the Power Gauge Report, you won't have to guess which stocks are our top buys, and you won't have to choose among dozens of old recommendations. Simply buy all of our current recommendations right now with equal investment amounts. And I believe that you'll do incredibly well in 2026. In fact, I believe it could be one of the best investing years ever for you if you take the steps we're outlining here.
That point can't be overstated. All of your life, they said, you shouldn't be handling your own money, right? They tell you to park it in an index fund or hire an expensive money manager to do it for you. They've told you in a million different ways that you just aren't smart enough. But I think the world is starting to see through this self-serving wisdom. Ordinary folks are waking up and taking control over their financial future. In fact, self-directed investors, often referred to as retail, had one of their best years ever in 2025.
And why do you think that is, John?
Well, I think apps with zero commission trading, like Robinhood, and a few years stuck at home, gave a generation of new investors the time to learn about investing and give it a try for themselves. And sure, much of that period was characterized by meme stock mania. But losing money on something like meme stocks will teach you a valuable and an important lesson about quality that could save you down the line. And now investors have access to independent research and tools like mine that were once reserved for professionals. As a result, last year was one of the best years for retail investors in history. In fact, Marc, can you put that quote I sent you from CNBC up on the screen? Once thought of as unsophisticated and easily duped, a new breed of retail investors is giving the professionals who have long dismissed them a run for their money.
Unsophisticated and easily duped? Ouch.
I bet they're eating their words now, considering their performance last year. Listen, if you're watching and still trying to decide if you're capable of taking control of your own investments, let this be your sign, because you can do this. You can make 2026 your year in the financial markets. Growing up, my family motto was no excuses. Our dad was a kidney transplant surgeon who'd fly to Paris for a 3-hour conference and then turn around and fly straight home just to make it to our high school football games. I thought it was impossible, but he did it. Every time that taught me something. Life is not always easy, but you need to decide what's important to you and to then go for it. Now you see how money is really made on Wall Street. You can see the same data the billionaires see and get similar tools to what the institutions use. Marc's handing you everything you need on a silver platter. So this is your no excuses moment that you can keep doing what you've been doing, following the headlines, hoping your index fund keeps up, wondering why the rich keep getting richer while you're stuck in the same place. Or you can take control and follow the smart money. The opportunity is right here.
And again, as part of the 100% risk-free offer Marc is making, you can get all the smart money stocks that Marc has hand-selected to help make 2026 your best year ever. These are companies his Power Gauge system rates as bullish or very bullish, with high persistence as measured by Chaikin money flow. In short, these are the stocks Marc believes give you the best chance to avoid a slipping point in 2026, moving out of today's headline names and into the stocks the smart money could be buying next. You'll also get full access to Marc's model portfolio inside the Power Gauge report, plus monthly updates showing when to rotate into new opportunities as conditions change.
Now, of course, I'll also watch the smart money so I can alert you when it's time to sell and lock in any potential profits. That's why today we're opening the doors with a 100% risk-free trial and a dramatic discount.
Now, normally access to Power Gauge report would cost you $499 per year. But today, Marc's giving you the chance to try his Power Gauge report totally risk-free at a huge discount to the normal price. Not only will you pay dramatically less than the normal price, but you can give it a full try for the next 30 days without risking a penny. Within minutes, you'll have access to your new recommendations, and if you're unhappy for any reason, you can get a full cash refund in the next 30 days. If you're eager to get started and want to be among the first new subscribers to get in on these recommendations, simply click the button below, which will take you to a page that summarizes everything included with a special offer.
But my offer doesn't stop there, Tom. I've also put together 3 free bonuses designed to help you capture gains and avoid losses in the months ahead. But before we get to those, John has offered to go one step further today and show you how to spot where the smart money is heading next.
Well, as Marc mentioned earlier, my brother Pete and I literally wrote a book on the subject, and it's called Follow the Smart Money. If you bought it on Amazon, it'd cost you about $39 for the paperback. But today, when you take Marc up on his offer, we want to send you a free digital copy of this book at no additional charge. As I mentioned earlier, our focus has always been unusual option activity. And in the book, we explain how it helps you spot where the smart money is moving before it hits the headlines, how to avoid common smart money traps, and how institutions build positions without tipping off their hand. Pete and I decided to do this because we believe this is one of the most important messages that we could possibly get out to normal, everyday folks right now who don't have the same resources that we do. Most people at home really have no idea how deep the rot goes in the mainstream financial media, and it's only getting worse over time. We believe everything Marc is offering you today, including access to his award-winning Power Gauge system and access to his proprietary Chaikin money flow, could be a lifeline for millions of Americans. And we just want to do our part to make sure this opportunity is so overwhelmingly valuable that you have no choice but to take action for yourself and your family right now. And that's why my brother Pete is calling in to explain another fantastic free bonus that we want to send you right now. Tom, do we have Pete on the line?
Our production team is telling me we're good.
John, are you there? Can you guys hear me all right?
Loud and clear, Pete.
Hey, Mark, great to see you as well. It's been a while.
Oh, Pete, it sure has. Thanks for joining us. Really great to see you again. And by the way, where are you calling in from?
Well, I'm calling in from Minnesota. I would love to have been there in person, but when John told me about the message you guys were getting out there today, I knew how important and exciting it would be, so I asked if I could call in. Now, I know lots of people aren't comfortable trading options and will think this book isn't for them, so I've been working and writing on what's essentially the book's missing chapter. It takes all the principles we could cover in the book and explain how they fit into the context of today's market, and especially how to take our unusual option activity ideas and apply them to ordinary stocks the smart money could be moving into next. It's called Follow the Smart Money, the Missing Chapter, and we're going to send everyone a free copy of that too when they take advantage of the offer that you're making today, Mark. This isn't available anywhere else at any price. The only way to get our missing chapter is through this offer today. We consider this to be the most important update we've made to the book since we originally published it.
Well, I really appreciate what both of you are offering here. I know you could make a lot more money by simply selling your book and this new missing chapter, and I don't take that lightly. You're offering it to everyone who acts today for no additional cost.
Well, that's not all, Mark. You see, Pete and I love options. We think they're a great way to potentially amplify gains on smart money trades like the dozens you mentioned today. Your readers have benefited from just by being here for this broadcast. And like we said, they're not for everyone. That's why we want to include a free access to our brand new research newsletter called the Market Rebel Report. In short, this is where we'll use our own smart money methods to uncover little-known stocks and deliver our top equity idea to you every month. No book to read, no chapters to study. We do the work for you and send you one clear recommendation, the analysis behind it, and how to act on it without unnecessary risk. 3-month access normally costs $199, but today we're going to give you free access as part of the offer Mark is making today.
In other words, if you subscribe the normal way to the Market Rebel Report, you normally pay nearly $800 over the course of 1 year. But today, you're giving everyone watching free access for the next 3 months.
Listen, we figured you should give everyone watching as many resources as possible considering the huge moves happening across multiple sectors today. AI, metals, energy, industrials, high tech, even defense companies, they're all moving up and down like crazy. There's a lot of money to be made right now, and just as importantly, you are going to want all the experts in your corner when this music stops. So if anyone watching is on the fence right now, just consider you will get our $39 book, our missing chapter that isn't for sale anywhere else, and our new monthly investment research letter, which we charge $199 for 3 months of access. All for free when you take advantage of Mark's offer right now.
I couldn't be more thrilled, Pete. Folks, John and Pete are graciously including some of their best work right now. These are the options experts who sold their trading business for $750 million. And when it comes to spotting big winners, few others come close. The Nigerians have helped deliver monster winners for their followers over the years, using their expertise in the options market, like 1,580% on retailer Macy's in just 23 days, 446% on vaccine maker Moderna in just over 2 months, 500% on SoundHound AI in 5 days, 1,268% on nuclear firm Oklo in just 5 days, and even 1,448% on AI darling Broadcom in just 1 day. Considering everything that we're including today, there should never be any question in your mind as to where the smart money is moving next.
All right, guys, I'm signing off, but thanks for having me. Most people don't even realize that investing this way is possible. I hope you can reach millions of folks with this critical message today.
Talk to you later, Pete.
Hey, so long, Pete. Great to see you again.
Thank you, Pete. So to quickly recap, when you take advantage of this offer today, you'll receive 12 full months of Marc's Power Gauge report, normally $499. You'll receive his brand new report of smart money opportunities to buy called the Chaikin 2026 Buy List. You'll receive a free digital copy of John and Pete Najarian's book, Follow the Smart Money. You also get a copy of Follow the Smart Money, The Missing Chapter. And you'll get another full 3 months of access to their brand new research service called the Market Rebel Report. Plus more free bonuses when you take us up on this discounted offer.
Now, as Pete mentioned, there's a lot of big moves happening in the market today. But the reality is there'll always be a new stock and a new trend creating extraordinary gains. That's why I'm including one more major bonus today. Now, of course, I'm giving you access to the Power Gauge system itself. For more than a decade, it's helped me identify the market's best stocks in bull markets and bear markets across every sector. When you join today, you'll get 12 months of free access to a streamlined version designed for everyday investors. You simply type in any ticker and instantly see whether it's bullish, bearish, or neutral. Using the same signals I've shown you today, you'll get all the insight just without the complex tools my institutional clients paid $5,000 a month for. It's powerful, simple, and built for people who don't want to spend all day staring at screens.
In fact, Marc frequently gets feedback from new users about how quick and straightforward it is to operate. Billy H. says, finally, a system that's easy to understand and use and works. Donald H. says, I feel confident that I have tools to help me make good, informed decisions. And Ab E. wrote me to say, I really feel in control for the first time in nearly 50 years of investing and no longer use others' recommendations except to look them up in the Power Gauge.
Now, these are my favorite kinds of compliments to receive, Tom, because I built this system for everyday people. You shouldn't need a PhD to do well in the stock market. For example, for stocks you may already own, within seconds you can check whether we see good or bad days ahead, and you can access the system on your computer, smartphone, iPad, whatever works best for your life and your money.
Folks, had you joined Marc a few years ago, you could have known when the Power Gauge flashed bullish on the best performing stocks of 2023, 2024, and 2025. It gave tech juggernaut NVIDIA a bullish rating before it soared 128% in 2023 alone. And beloved AI infrastructure stock Vertiv a bullish rating before it shot up 253%. Same with cruise line Royal Caribbean before it jumped 96%, and home builder stock Builders First Source before it skyrocketed 134%. And in 2024, the Power Gauge flashed bullish on financial services company Robinhood before it rose 108%. Supermicro Computer before it shot up 180%, and it flashed bullish on electricity generator Vistra before it soared 255%. And to no surprise, the same thing happened again in 2025. The Power Gauge flashed bullish on the Van Eck Junior Gold Miners Fund before it soared 271%. It flashed bullish on defense company Palantir Technologies before it rose 176%, and flashed bullish on natural resource firm U.S. Antimony before it rocketed 475%.
In other words, Tom, the Power Gauge basically nailed 3 of the top performing themes of the past year: gold, AI, and critical minerals or resources. Well done, Marc. That's not easy.
Oh, coming from you, John, that's a big compliment. I'm not exaggerating, Tom, when I say that the Power Gauge is my life's work. It's literally everything I learned from the likes of George Soros, Stanley Druckenmiller, Steve Cohen, and every other major Wall Street investor that I was honored to count as a client.
In other words, everything Marc has been able to glean by peeking under the hood of exactly how the most elite smart money traders in the world think about investing during his 50-year career.
Wow.
Yeah, that's right. And There's more, Tom. We've prepared one more incredibly valuable bonus that I haven't even talked about yet. The Power Gauge not only helps you find some of the best stocks to buy, it also helps you avoid big losses. One great example from last year, Apple, one of the greatest stocks and companies of our era, but even great companies can become terrible investments if you buy at the wrong time. And on January 10th of 2025, the Power Gauge flashed a very bearish rating on Apple. Not surprisingly, the company fell 30% over roughly the next 3 months. When we received this very bearish warning from the Power Gauge, we dug into the data and found serious issues. As we wrote at the time, unfortunately for Apple, growth is in question right now. AI features don't seem to be motivating consumers to make more purchases or make purchases early. Worse still, Apple is facing an iPhone sales ban in Indonesia. The company recently offered a $1 billion manufacturing investment in the region, but the government rejected that offer. Now, did Apple eventually turn things around? It did. But it took nearly 9 months to get back to break even. And we know our readers find it extremely helpful when we can show them a downturn could be coming in a stock they're very likely to own, like Apple.
You know, this is so important because many investors out there say that they're buy and hold investors. That is until they hold a company like Apple and watch it fall by nearly 30% in just a few months. And that's when they turn into what the smart money likes to call buy and fold investors. They're typically selling at the worst possible time, right when the smart money is getting ready to scoop up shares on a discount. But if you're using a tool like the Power Gauge, you never need to make a mistake like that again.
And Mark, you've prepared something for everyone watching right now to address this.
That's correct, and that's why I also want to send you our current list of popular stocks you should avoid right now. I scanned all of the bearish ratings in the Power Gauge to isolate the tickers that we predict are both widely held and headed for the worst destruction. Everything you need to know is in our special report called Top Stocks to Avoid Right Now. It's very likely you may already own at least one of these companies in your portfolio, so I absolutely recommend that you sell or avoid these in the months to come. I published a similar list of stocks to avoid at the beginning of 2025, and even in a year when the market rallied 16%, if you were holding some of the companies I warned to avoid for 2025, you could have avoided some big losses in companies like Equifax, which fell by nearly 15%, International Flavors and Fragrances, which dropped by more than 35%, and Westlake, which plummeted more than 55%. That's why I want to get my list of widely held stocks to avoid for 2026 in your hands right now. Everything you need to know is in my brand new report, Top Stocks to Avoid Right Now.
To get started with everything Mark and John have described here, simply click the Get Started button below, which will take you to an order page where you can get all the details and see your special discounted offer before placing your order. Again, this offer is 100% risk-free. You can get access to everything Mark has described so far in a matter of minutes. And if you change your mind in the next 30 days for any reason, no problem. Just contact Mark's Maryland-based customer service team and they'll issue a prompt refund. But I doubt you'll want a refund once you see why folks like Bob Lang, an equities trader and frequent guest on CNBC and Jim Cramer's Mad Money, once said, "In all of my years in trading, I've tried many different styles and approaches, but Chaikin is one system that stands out head and shoulders above the rest."
Now, Tom, you know one thing I love about the work my team and I are doing these days is that I hear from not only investment pros, but regular folks who have taken money away from lackluster advisors and have never done better. For example, I got this note from Derek W., a subscriber of another of my elite research advisories. He recently used the Power Gauge to move his money away from an advisor and take control of his own financial future. He told me, "Having the Power Gauge on my side has helped me navigate the market declines and bank failures, even beating the S&P and NASDAQ during that time. I believe that having Chaikin Analytics as part of my investment journey will set myself and my family up for financial stability with peace of mind, hopefully earlier than most." You know, one thing I'm really worried about for our country in the coming years is that the wealth gap is going to really accelerate between those who understand the lower risk ways to grow their money in the markets and those who don't. That's why I sometimes call the power gauge the great equalizer. It could help radically improve your financial situation no matter how much money you're starting with or how much you make.
Now, Mark, since you brought up the idea of the great equalizer, I think it would be the perfect opportunity to let everyone watching at home experience that right now. Now, you've promised to share one of your favorite power gauge stocks for free today, so let's hear it.
I was just about to say the same thing, Tom. So let me give you the details on one of our favorite investments right now, selected from a short list of stocks ranked very bullish by the power gauge. My bullish recommendation is Onto Innovation, symbol ONTO. Now, you can't have a data center that's running the new big AI models without semiconductor chips, and Onto makes sure that those chips are up to par. They sell testing and quality control equipment to semiconductor manufacturers. It's a brilliant way to play the AI data center boom without betting on NVIDIA. ONTO has a bullish power gauge rating. Smart Money has been accumulating it for the last 3 months, and the power gauge rates it a buy.
Well, the company's technicals look great. I didn't know all those details you just shared, Mark, but that information could prove invaluable to folks that are watching right now, considering how uncertain the next few months could be in the market.
And remember, the only place to access everything described here is the power gauge report. So, Mark, what's your free stock to avoid right now?
Tom, my number one stock to avoid is Oracle, symbol ORCL. Now, Oracle has done a great job in database management, but they've just made a $300 billion bet on an IOU from ChatGPT. That's a very big bet, which may not pay off, and the stock is showing the stress of that big outsized bet, has a bearish power gauge rating, is already down over 40% from its recent peak, and this stock is one that I would avoid in 2026.
Yeah, Oracle used to be one of the high flyers. I mean, I remember a quarter last year when it was up 35%, bang, right after earnings. And it made Larry Ellison the richest man in the world. He jumped right over Elon Musk, but it only lasted a short time.
Sure.
And then the stock started rolling over. And I guess what Mark is saying right now is that maybe that rollover is not done. It used to be such a loved stock, but is it?
It was, and the power gauge was bullish on the big run-up into that earnings report. But times have changed, and bets like that on a company that's not public and not making money, namely OpenAI and ChatGPT, could change the long-term picture for Oracle. This is a stock that I would avoid in 2026.
So, Mark, just to reiterate here, Oracle is the number one stock to avoid.
That's correct, Tom. But remember, this stock is only one of several ticking time bombs that could blow up your wealth in the coming weeks if you're not careful. To get all of those names and tickers at no additional cost, please join me in Power Gauge Report straight away. I'm offering an extraordinary discount to anyone who acts through this special offer, and you'll have the next 30 days to try everything out and decide if you like it.
And remember, when you order right now for a massive discount off the regular price, you'll get full access to Mark's model portfolio of the best stocks to buy now to take advantage of this bull market in 2026. Plus, Mark's report called the Chaikin 2026 Buy List, detailing the world's best smart money plays right now. Plus, free access to a light, easy-to-use version of Mark's Power Gauge system called the Power Gauge Rating System, including monthly updates and recommendations on exactly what to do when this bull market comes to an eventual end. Plus, free access to Mark's special report on wildly popular stocks to avoid in the dramatic weeks to come, and 3 additional bonuses the Nigerian brothers have decided to throw in today, which are all tailored for showing you how to profit off moves the smart money is potentially making, which would normally cost at least an additional $250 all on their own.
Well, apologies for interrupting, Tom, but there's actually one additional bonus I want to add in too. It's an exclusive mystery gift we didn't have a chance to dig into today, but it could be absolutely transformative for your wealth in the weeks ahead. Others have recently paid as much as $2,999 to access this in person, but you'll get it free of charge when you act now.
Wow, that is a highly valuable bonus. And that alone could be worth the cost of joining today. But again, you'll get it free when you accept a 100% risk-free trial to the Power Gauge report today. So if you're interested, just click the button below to see all the details.
It's an extraordinary offer we've put together for an extraordinary moment in the markets. Remember, it doesn't pay to stay on the sidelines right now. As we've explained, we're already tracking dozens of new opportunities that the smart money is positioning in right now. But of course, not all good things can last, so that's why you'll also need to know exactly when to start taking profits in 2026. There's no better way to do this than by following the Power Gauge report.
But if you want to take advantage of this offer, you need to act right now. All you have to do to get started is click the button below. Just remember that all investing does carry risk, and you should never risk more than you're willing to lose. But the 3-year annualized gain for the Power Gauge report is 11.8%. And this return measures the results achieved by all of our recommendations scaled to a 1-year period. And as one of Marc's longtime followers, Paula B., said, I had little left to live on and invest in the market. And so investing in the Power Gauge subscription was a risk. It does, however, give me confidence in investing, and it's paid off. I really couldn't invest without it.
Listen, we're opening up the doors on our research today at a very critical time. Most Americans are very likely to make 2 big mistakes in the markets in the months to come. They're going to miss out on the big gains still in store for 2026, and they'll most likely get hurt badly when stocks inevitably fall.
Again, this is your no excuses moment. You've seen everything you need to see, and we're making you an incredible offer simply to try this. If you're unhappy, we'll make it right. Don't waste another year watching from the sidelines. Make this the year that you start following the smart money.
Get started with the Power Gauge today, and you can potentially make a lot of money and avoid these mistakes. As Marc mentioned at the beginning of this presentation, he's expecting a major slipping point for investors in the coming months of 2026. And the time to move your money into the kind of stocks that will be making headlines tomorrow is today. And John, thank you so much for being here with us today.
Oh, it's my pleasure, Tom, and thank you both for having me.
And I got to say, it was a real pleasure to get not one, but 2 CNBC legends here today for this briefing. And to everyone at home, you've heard everything you need to know. Click the Get Started button below to go to our secure order form, where you can review everything once more before submitting your order and gaining access to everything we talked about today in just a few minutes.
Before we close, I would love to thank my friend John Najarian.
My pleasure.
It's been a long and wonderful road together, buddy.
It has, and you've saved me and made me a lot of money.
And thank you all for watching. I hope to see you in the Power Gauge community very soon. Be well.